everyone, welcome to our presentation on Welcome Capital. Here today you're going to learn why we absolutely love hospitality assets and why we're buying them across the USA and why you should join us. Let's get started. Before we start on all the fun stuff, let's get all the legalese out of the way. So, of course, everything that we're talking about today is for informational purposes only. So it does not constitute legal, financial, or tax advice. So if you have any questions about what we're presenting today in terms of those areas, you should absolutely consult your favorite CPA or attorney. Here at Welcome Capital, our mission statement is not only to help folks just like you diversify your real estate portfolio through investing in hospitality assets. Our vision is also to create financial freedom through education and networking with our investors, as well as to create financial freedom by offering high quality, highly unique boutique hotels that inspire folks to travel more. So we sometimes get the question of what is a real estate fund? So let's start with that. A real estate fund is basically where we're not just buying a single deal, we're buying multiple deals at once with your money. So instead of investing in a syndication where your money only goes to one specific deal, now your funds are diversified across a portfolio of hospitality assets across the USA. So that will be both hotels as well as short-term rentals. That will be in ski destinations, that will be in mountain destinations, that will be in lake destinations, beach destinations, you name it, which means the end result is that your portfolio is well diversified compared to a real estate syndication. Speaking of syndications, another strategy that we can use at the fund is that we're able to pivot. Whenever the market shifts, whenever the tourism trend shifts, we're able to redeploy some of the capital into additional markets that make more sense or has more cash flow. Versus syndication, you're really tied to one real estate strategy, you're tied to one real estate location, and therefore it's a lot less flexible in terms of investing. And really, the name of the game in 2023 is to be open and nimble and able to capitalize on real estate opportunities quickly and efficiently. So why hospitality? So some folks may not be familiar with hospitality assets, some may. So we are going to talk about why we love hospitality assets. The number one reason why a lot of folks love hospitality is because of the higher cash flow and higher cap rate that we're able to purchase these assets at. Any given STR or hotel is going to cash flow net an extra 2 to 4x over multifamilies or comparable long-term rental single families. And the other reason is that, at least for hotels, there's less competition out there. A lot of multifamily investors are not going to touch hotel assets because they don't understand them. STR operators are not going to touch hotels because they're a little more complicated and larger than what they're used to. And so there's this little bubble of opportunities that, even though a lot of other opportunities are picked over and have multiple offers, a lot of times hotels will end up not being really sold at market value, especially in times of uncertainty like 2023. And that is why we're able to get them at a significant discount. And secondarily, we are able to push up the valuation on these mom and pop hotels by infusing them with 21st century technology, thanks to Mike, which he will talk more about his background later. And also, we don't have to lift a hammer in order to push the valuation up. We can simply put a mom and pop hotel that has 0 online bookings right now and put it online, put it on Expedia, put it on Airbnb, VRBO, hotel.com, etc. And it will generate more revenue and therefore be valued higher. And so unlike multifamily, we don't have to renovate in order to generate higher valuation. And of course, finally, we are able to have multiple sources of revenue, not just rental income. So that means we can have partners such as kayak rentals or bike rentals with our hotels. We can have a snack pantry at the front of the hotel. We can have vending machines. We can have ATMs. We can have just basically a lot of different ways to make money at the hotel and not just rely on one single source of revenue. So now we're going to go over each of our team members and our special power, so to speak. And so you'll see throughout the bio introductions that we live and breathe hospitality. We're not just dabbling in hospitality. This is what we do every single day. So a little bit about myself. I'm a former patent litigation attorney, and now I travel full time identifying great deals and real estate deals and meeting investors across the USA. I double majored in chemical engineering and biochemistry in my former life, and I worked with a lot of Fortune 500 companies in my former life as well. Now I own multiple STRs across multiple markets and also 4 hotels and motels. And I speak at nationwide conferences about STR investing and hotel investing. And I own a 48,000 member Airbnb group called Airbnb Professional Hosts. Moving on to some of the projects that I worked on. So Candlewick Inn is our very first hotel, and we picked it up for $750K, and we were able to push the valuation to $2 million in less than 8 months. Cedarwood Inn is actually the hotel that I'm sitting in as I'm speaking right now. It's 19-unit boutique hotel in Western North Carolina. The Taos property is a duplex I picked up for $200K and it appraised for $600K plus a year and a half later.
Hey everyone, how's it going? I'm Alex Savio. I'm married, father of 4. I live here in Southern California. I've worked in healthcare for a little over 20 years now, and I've been investing in real estate about the same amount of time. I've owned long-term rentals, invested in multifamily syndications, but my true passion is in hospitality. So we currently self-manage 6 luxury short-term rentals in multiple states. Another passion of mine is I love helping other healthcare professionals invest in real estate. So that's doctors, nurses, other respiratory therapists like me. I do have a Facebook group where I host weekly meetups and talk about different topics, all about real estate. I do speak at different short-term rental conferences and host meetups. And I've been a guest on numerous real estate podcasts. And I'm a co-author of a best-selling book called Hospitable Host 2. And one of my passions is I love to hike. These are 3 of my short-term rentals. To the left is a beach home in Gulf Shores, Alabama. In the middle, that's my second short-term rental. It's a pool cabin. We'll go over the numbers there a little bit later in the slides. This is one of my favorite properties. And to the right is my first property. It's in Pigeon Forge, Tennessee. It's my first short-term rental. Absolutely love that property.
Awesome. Hey, everyone. My name is Michael Reddock. I'm glad you guys are with us today. In my journey, I've transformed from a technologist into a passionate hotelier, operating in the beautiful states of Texas, Arkansas, and North Carolina, where I'm at right now. With over 2 decades of experience in technology and sales, I've dedicated myself to enhancing the guest journey, operations, and maximizing revenue management. My background is computer science, and so I bring a unique blend of technical expertise and business acumen to the world of hospitality. But I also have a hidden passion, and when I'm not working on our hotels, you can find me behind a smoker trying to perfect the art of smoking a mean brisket. And to add to the mix of everything, I proudly own and manage 4 exceptional hotels and a number of short-term rentals. So here's a few of the projects that I own. There's one of the hotels that we have in Texas called Motel Mia. There's a beautiful short-term rental near downtown Bentonville, right near all the bike trails. And then in Austin, Texas, I have a very large short-term rental that I love and cherish and love to get back to as often as I can to smoke some barbecue and host my poker games.
Hey everyone, my name is Josh Goldstein. I am married, father to 2 kids. I live in Southern California. I am a producer by trade, which means I deal with budgets, schedules, and problem solving. I have built up my real estate investing portfolio over the past several years. I'm at 20 doors. I have 11 short-term rentals and 9 long-term rentals. And I love value add projects. I love finding deals where people aren't looking, renovating them and making them shine. I've been a guest on multiple real estate podcasts, including Bigger Pockets. I go to lots of real estate meetups and conferences, and I also love tennis. here's some of my projects. The first one is in Idlewild, California. This was a really cute A-frame. We did some pretty awesome functional and design work to make this thing shine, and guests absolutely love this cabin. I think it's one of my family's favorite cabins. It's kind of just a little slice of paradise when you get there. In the middle, Smoky Mountains, Tennessee. That's a 4-bedroom, 3-bathroom cabin on 4 acres. We renovated that main cabin, but also it had a 1-bedroom cabin that had a long-term tenant and then 2 mobile homes that are paying me lot rent. So the 4-3 is up and running and it's going really well. We are almost done renovating the 1-bedroom because the tenant moved out, and that's going to be higher end but smaller, and that's just going to be a cash cow once it's all the projects are done with that property. Last one is in Big Bear, California. Another A-frame. As you can tell, I have a thing for A-frames. We got this and just made it shine. I mean, it looks so nice inside. We added central AC. We did some great design work, and this is another property where guests just truly enjoy their stay and rave about their experience there.
All right, a little bit about the fund itself, because I know that's what you guys are waiting for. So the minimum investment in our fund is $50,000. And at that tier, you are looking at 7% preferred return and a 70% to 30% GP, LP, or actually LP GP split for the profit. And at the 100K investment, you're going to get 8% preferred return or pref. You're also invited to our exclusive investors only retreat, where you get to network with other hospitality asset investors across the USA. You get to network with us and you get to learn a lot more about STR and hotel investing. So if you're interested in the Welcome Fund for the educational aspect, this is at the tier that you might be interested in. And then 200K and up, we're looking at still 8% preferred return, but now you get 1 week of free stays in the off season. So now you are also able to combine the educational aspect with additional free stays, so you can look at additional STR markets with your friends and family.
So our business strategy, I'm going to talk about this for a bit. We're in general very conservative in our underwriting, but we're aggressive with locking down the best deals to put ourselves in the best position moving forward. And how we do this is, first of all, when it comes to hotels, we're looking for small to mid-size hotels that are too small for institutional money and too big for mom and pop operators. So it leaves a lot of deals hanging out there that we can kind of snatch up. Another thing is, being a fund, we can move faster. We have cash ready to move faster and close on a lot of these deals, whereas a lot of times sellers, if they hear it's a syndication, they know they have to still raise money and may not be able to close, whereas a fund, we have the money ready to deploy and we can lock it down, and sellers a lot of times will go with people in our position versus a syndication. For short-term rentals, we look for value add. A lot of short-term rental operators go turnkey, and there's nothing wrong with that, but it also leaves a lot of value add assets out there that we could go in, make really nice, and get some great cash flow and upside with their appreciation. We look through lists of assets that have loans coming due. With commercial loans, you have to refinance every 5 to 10 years. And with the interest rates rising, a lot of operators will get in trouble if they haven't planned properly. And when we see that loans are coming due, those are potential assets that we can get at a great deal. We also search through franchise hotel owners that have PIPs, which is property improvement plans that are coming due. A lot of times these owners don't have the money to spend on these, and they could be very expensive, where we could go in, buy the asset from them, and negotiate the best deal to either get out of the franchise or delay the PIPs so that we could kind of break the franchise later and get our plan in order to make it an independent hotel. I want to tell you about our first acquisition with the fund, which is the Microtel in Bentonville, Arkansas. We purchased it for $3.6 million. It's 76 keys, as is, without doing anything, and appraised for $6.5 million. With the renovations that we will do eventually, it's today appraised for $8.75 million. In 2022, it grossed $1.2 million. And this year, after us taking it over, we're expected to gross between $1.3 and $1.4 million. We pre-negotiated the franchise fee to break the franchise. So we're going to keep it as a franchise for about a year. And then once we are ready, we're going to break the franchise, rebrand it, and relaunch and drive value up even more. So once we have all these assets and we've stabilized them, our plan is to cash out refi and buy more assets. And that's going to be our strategy through the middle part of our fund. And then by the end, we're going to have so many assets that we're going to sell it to institutional funds or retail buyers and cash everyone out.
All right, let's talk a little bit about targeted returns. So we tend to under-promise so that we can, in the future, over-deliver on what we promise. So if you're looking at, so these are basically, these are based on our most conservative assumptions. So we're looking at a potential equity multiple of 2x every 5-ish to 6 years. And what that really means to those of you guys who are new to passive investing is that if you're going to give us 100K in about 5 to 6 years, that 100K will equal to about 200K. The rate of return or internalized rate of return is targeted at 13 to 18%. And the distributions or the payouts happen quarterly after we have stabilized the assets. And of course, let's talk about the other factors aside from just cash flow, because of course cash flow is amazing, but it's not, it doesn't really correlate with your quality of life. So not only are you investing to earn money, you're also investing to travel more. So with the Welcome Capital Fund, 200K and up, you're going to get free stays and addition to the cash flow. And you're also able to get additional educational and networking opportunities at 100K and up. So a lot of folks who invest with us are not only interested in the cash flow, of course the cash flow is great, but they're interested in all these additional perks that a lot of funds are not offering, which is getting to network, getting to learn more about short-term rentals and hotels, and getting to travel to these beautiful destinations so you can learn firsthand how these short-term rental markets are operating. And a little bit more about our target market. So I mentioned earlier that this one will have around plus or minus 10 properties. So where are we looking? We are looking at pretty much every single STR friendly location for short-term rentals, meaning that there's going to be less short-term rental regulatory risk. In short-term rental unfriendly locations, we are primarily focused on hotels because there's not a lot of competition in terms of daily rental providers that are going to be able to market themselves on Airbnb or VRBO in those kind of markets. We're also looking at markets that are growing in terms of tourism. And that's basically where it's within 2 to 3 hours driving distance of major metros that are expanding. So wherever it's a great getaway for Dallas or for Austin or for Denver or for Atlanta, or basically places that are rapidly growing in the next 2 to 3 years, that's where we're targeting the most in terms of where we're looking for vacation rental destinations. And then also we're always looking at stuff that is significantly below market pricing, because a lot of people are not interested in hotels in 2023. We're able to pick hotels up for sometimes as much as 30 to 40% off the sticker price of these properties in normal years. We're also looking at value add properties where maybe right now it's not as valuable for one reason or another. And we're putting some elbow grease into basically making them making the valuation go up, so to speak. So here are some of our target markets. Of course, this is not an exhaustive list. So I mentioned some of these markets already. Northwest Arkansas has been growing rapidly, and that's one of our heavy focuses. And of course, that's where our first 2 assets are going to be in the fund. But we're also looking at Colorado, especially around Denver and other larger metro areas. Whatever is really easy to drive from those destinations. In Arizona, because of all the growth around Phoenix and Tucson. We're also looking in Central and South Texas, of course, in lake and beach destinations. We're looking in Western North Carolina, which is where I am right now, and of course, South Carolina as well, in beach and mountain destinations as well. And in terms of what assets we love the most, right now we're getting amazing deals on hotels. So we have a heavy focus on hotels, especially on auction websites and off-market deals. But we're also interested in cash flowing short-term rentals. We're interested in short-term rental conversions from long-term rentals and hotel redevelopment. And let me talk a little bit about the creative financing. So not only are we able to get really, really good deals at significantly below market, a lot of times these hotel sellers are not able to sell their hotels because they don't have a lot of financials. In those instances, we're able to get seller financing deals because they know they don't have a lot of financials to show for. And so we're able to get somewhere around 5 to 6% interest on many of these hotel deals. We're also able to create relationships with local banks so that they give us more favorable rates. As an example, for the Microtel Benton Mill that we just closed on, we were able to lock in 8% interest only for the next 2 years. The interest rate is also locked for the next 5 years. And also we were able to get 85% loan to cost on this purchase. And so those local bank connections are key. We're also looking at states that have more tax-friendly provisions, and we're also looking at properties that we can do a cost segregation on, and those tax benefits will pass down to you guys because you guys own a piece of every single deal that we buy. So a few case studies for those of you guys who are interested in some of our past deals. This is a property that I bought in Corpus Christi, Texas, which is on the Gulf Coast in Texas. And I was able to purchase this in fall 2019 for $250K, and I was able to generate $97K in the trailing 12 months. I was able to sell it for $500K, and I was able to redeploy that capital into 2 additional short-term rentals. This is exactly the kind of strategy that we're looking to employ at Welcome Capital, which is basically either refinancing our hotel and therefore buying another hotel, or we can redeploy this capital, into it. We can sell a short-term rental and redeploy into additional short-term rentals. Well, this is our hotel that we bought in the Ozarks. We bought this for $750K, and we put about $500K of renovation and furniture and equipment and decor into it. And you can see the end result in the after photo. So it's night and day difference. And so this appraised for $2 million within a 8 months time span. And we're looking at developing the back building into additional longer type, more Airbnb type residences, as well as developing an additional acre into new A-frames and tree houses.
Hey guys, this is my second short-term rental. It's in a very vacation-heavy market. It's located in the Smoky Mountains of Tennessee. I purchased it in May of 2021 for $680,000. The first 12 months, it did $148,000, so it was a huge win for us. Cash on cash return was 41%. Increased equity of about $420,000 right now, because a friend of mine just sold for $1.1 million. And I got great tax benefits from it. I got $200,000 in bonus depreciation that helped offset my W-2 income.
So that's it, guys. So if you have any questions, please feel free to reach out to us. Alex has created this QR code on the bottom right corner of your screen right now. So be sure to check out some of the hotel case studies that we have provided as a free resource to you guys. You can also find the portal that has our legal documents in the QR code as well. If you have any additional questions, you can always email me at dialiu@gmail.com or diya@gmail.com. And if you're watching this on YouTube, we're going to have more educational content about short-term rentals and hotels. So be sure to hit the like and subscribe button below.